fundsupermart.com.
Hi Philip, what is your outlook for European equities over the next 2 to 3 years?
Well, I think we're quite excited about European equities, even if the outlook for the economies is very challenged. So although you're going to see low growth in European markets and GDP figures, actually we're coming to European equities on a low multiple, so only around 11 times, and a dividend yield of 3.7%. So that's actually quite exciting.
Given the uncertainty surrounding the Eurozone debt crisis, what are the reasons for investors to maintain exposure to European equities?
I think the best thing about European equities today is that not very many people are looking at the area. So because the headlines are difficult, because everybody's worried about the level of debt, actually European equities are being under-researched. And so for us, as European investors and stock pickers, that's actually quite a good environment. So I think the alpha opportunities are definitely there today.
Within Europe, which sectors or countries represent the best investment opportunities?
Well, so we're overweight growth. So we're growth investors. We're looking for quality growth companies that can grow even if the economic environment is very difficult. So the companies we look for are companies exposed to growth, whether it's in Europe or internationally. So we tend to look for exporters because the local European market is difficult. And so we're overweight industrials, healthcare, which we see benefiting from the ageing population in Western Europe, and we're underweight financials and what we call value traps, like utilities and telcos, which have a low level of growth and which might struggle to pay their dividends.
So are there other sectors or countries that are less attractive from a risk-reward perspective?
Yeah, well, we're underweight areas like Spain, Portugal, and we have nothing at all in Greece at the moment. So we're definitely underweight countries where we see a real challenge for GDP growth. And we'll only invest in companies which are located there if we think they have real growth prospects. So we own some companies in Spain, but they tend to be international companies. But we own lots of companies in Germany with international growth prospects, companies in the Nordic areas which are outside the Eurozone. So underweight the periphery and overweight core Europe.